What's up, guys? I'm Nobody Special. Today, we're going to talk a little bit more about the Evergrande crisis and the Chinese housing collapse. We have a special guest with us today who's going to talk to us about counterparty risk and derivatives exposure and how a little bit of bonds can actually turn into a really big problem. Thank you for joining me. I'm Jack Campbell, and I'm Nobody Special, and we have a special treat today. This is the first guest appearance in the history of our channel, and all the way from the land of alternative economics and contrarian views, we have Mr. Mario Aneko from Aneko 64. Mario, thank you for joining us. Thank you for being here.
Oh, you're welcome, and thank you for inviting me, and it's a pleasure to be your first interview.
Now, we've had a couple of emails back and forth over the last couple of days talking about the Evergrande story, and it seems like, we've been following the story a lot on my channel, and it seems like you're pretty well read on the subject. And so I wanted to talk to you a little bit today about what's going on in China and what's going on with Evergrande. And in one of our messages, you actually mentioned that you had reached out to this German research firm, DMSA. What did you learn when you talked to them?
I sent an email to Dr. Marco Metzler, wondering if he'd have some time for an interview to talk about Evergrande. And I had a reply from his press officer. And she said, right now, Dr. Metzler is really busy and that he would speak to me after the bankruptcy of Evergrande is determined. So that's the thing with China and this Evergrande situation. I think there's a lot of complacency. A lot of people are trusting Reuters, Bloomberg, all the mainstream media. And it's weird because I've lost trust in all mainstream media, but for some reason, people seem to think, oh, just because it's DMSA, they haven't heard about it, there's no credibility. But the guy's come out. He's put his name on the line. He's done press releases. They've released another a couple of more press releases 2 days ago and today. And of course, from China, it's very hard to hear what's going on there. And I would think their media and their government are probably trying to keep this very under the surface. And so that's what the his press officer said, that he will speak to me on my channel, but right now too busy. And I thought that was an interesting comment. Once the bankruptcy goes through, he'll be ready to speak to you.
Yeah, I found that interesting that he didn't want to speak too much. And I've actually seen some similar responses in some other press outlets. I think it was Manager Magazine is a German publication that had interviewed him recently, and he didn't want to specify exactly the bonds that he was holding. I think he was worried about kind of being targeted for repayment to make him go away. And I didn't know if that might be why he's so hesitant to speak in some media outlets right now, because he's the only person I've seen who's been willing to have his name attached to any statement regarding these payments being made. So I found that very interesting.
I also think it's because the process involves a legal process. He has to go to court. So probably that's why as well.
Okay. Now, there was another press release came out of the MSA today, and this one was focusing a little bit about bonds and on derivatives exposure. What are your thoughts on that one?
Yeah, it's interesting because when I emailed you, I think yesterday or the day before, I said we could maybe talk about the fact that there's probably, and at the time I didn't know that there's probably some derivatives involved. And in the press release here, I think it's on page, let's see, page 1, first page. You look at the last paragraph, it says, where is it? According to a research report by investment bank Goldman Sachs, the market's CDS. CDS is a credit default swap. That's a derivative. That's basically just a bet. And if people have watched Big Short, and they've seen that this is what triggered the subprime crisis in 06, 07, 08 was the credit default swap. Says exposure to Evergrande is said to be around 158 billion. And it says here, this is from Dr. Metzler. This shows that the extent of the spillover effects of the Evergrande bankruptcy, in addition to 23.7 billion in bonds, another 158 billion would then be lost. Dr. Metzler summarized. So yeah, what's the 23.7 billion? Well, that's the amount of, I think, offshore bonds there are, and then the 158 billion is the amount of notional bets on these 23 billion. And that's the thing about derivatives. They're very dangerous. People leverage themselves, and it's what led to the collapse of Wall Street, which we had to bail out in 08, 09. And nothing's changed. The banks are still at it. And the thing is, 157 billion or so might not sound a lot. The Fed can print that in one day. But the other thing is that a lot of these derivatives are written up by the big international banks. And if they have problem getting paid or having to pay, because let's say you bought like $1 billion worth of credit default swaps on Evergrande bonds. And if Evergrande went bust, Goldman Sachs would, your banker, let's say, for example, they'd have to pay you $1 billion. So it could create huge problems. It probably, and it could be a daisy chain. It could lead to other derivatives being called upon. It's just a mess. And this is probably why they're keeping Wall Street, the mainstream business press. That's why they're keeping things very quiet, because yes, it could spill over.
Yeah, you touched on a couple of really, really interesting points there. You showed how a 23.7 billion in bonds, right? In the age of trillions of dollars being printed seemingly daily, doesn't seem like that big of a number. But then right away, we're talking from 23.7 billion in bonds, we're talking about 158 billion in potential losses from these credit default swaps, which are basically insurance policies on the bonds, right? So
and it's amazing how they bet more than there are bonds. It's like what they did with the housing market. They bet more than the housing market was worth. And so much for the regulator or the Bank for International Settlements and all their reforms, right? Nothing's changed.
So yeah, I mean, we've got one company, Evergrande, 23 billion in bonds, and now 158 billion in CDS risk. Now, Evergrande is the one company, they have 300 billion in debt that's on their balance sheet. We'll talk about their secret debt in a minute. And then you have all these other developers and their debts, and they're nearing default. So how much derivatives exposure is out there? So what we're really getting into here is this concept of gross versus net exposure on the banks and counterparty risk. And that's when things really blow up. And that's kind of how things went during the great financial crisis, right? Is, people had a $1 million long bet and they had a $1 million short bet. And while the banks reported a net positioning of zero, but they really had $2 million in bets out there. And when one couldn't pay, they lost $2 million.
Yeah, that's the thing. The bankers always come out about derivatives and say, oh, it doesn't matter because it all nets out. Yeah, it nets out until one of the counterparties fails. And there you go. The counterparty risk is so important.
Right. So you touched on a similarity there to the 2008 situation with the U.S. real estate collapse and the global financial crisis that came out of that. Do you see anything distinctly different about the Evergrande situation and the China housing collapse versus how things went in 2008 in the U.S.?
I guess there is a similarity, that it's the real estate market. And I saw as well that in China, the real estate market is like almost 30% of the GDP. And in 07, 08, 09, we found out after everything imploded that a lot of investors, pension funds from all around the world. They're all at it, investing in subprime mortgages, in the derivatives. Let's say a local community in Norway, for example, or whatever. Um, I'm not sure exactly how the whole world is exposed to the Chinese housing market. I guess you could argue that through the offshore bonds, it's about 23 billion plus the CDSs, and even domestically, you don't know, because I think a lot of the foreign financial companies, they've gone to China, and they've got like a foothold in China. They're in there directly, so they're not just going through the offshore bonds. That I don't know, but I think there's a lot of complacency out there towards Evergrande, and when it does hit the fan and everything implodes, I think we'll find out a lot more. But right now, I can't really specify. One thing that is similar is that it's another housing bubble.
Yeah, and you mentioned it, 30% of GDP, which is different than the U.S. I don't know what percentage of U.S. GDP housing was in 2008, but it certainly wasn't 30% of U.S. GDP. So in that regard, this is different. This could be significantly worse than the global financial crisis ended up being, because you're talking about a much bigger share of the total economy over there. I've also seen a lot of stories coming out about the chairman of Evergrande's board is being forced to put mansions up as collateral, and the selling of private jets. And a lot of personal wealth and personal assets are supposedly being used to make these payments. What are your thoughts on that? Are they just buying time? Could this potentially solve the problem? Or is this really just political posturing by the CCP?
I don't really know. I mean, the only thing I know is that the guy who founded Evergrande, in the last few years, he's been able to withdraw like $5 billion or something of dividends. So selling a private jet, I don't think would help pay billions in bond default, or even hundreds of millions in coupon payments. So I don't know. It's probably a little bit of PR just to calm people down so people don't ask questions.
Yeah, I think the PR element is probably pretty important. I've mentioned on my channel a few times, the one thing I think the Chinese Communist Party fears is the Chinese people. I don't think they're afraid of Europe. I don't think they're afraid of the US or Taiwan. I think they fear their own people more than anything. That's their only threat to power. So they're managing this public relations aspect very closely. And I think, making sure that these wealthy executives are publicly showing pain the way a lot of these individual Chinese investors are is important. And I also see it a little bit as Xi Jinping consolidating power, kind of the same way he's been suppressing some of these big tech execs in China and some of the celebrities who have just been disappearing from social media, as a way for the CCP officials to kind of consolidate power and exert their influence also.
Yeah, and the other thing about the Chinese real estate market is the wealth management products that we're talking about. And I think the DMSA, they came out with another press release a couple of days ago. And these wealth management products, a lot of these have been started out as like asset management and portfolio management by these real estate companies, and apparently it's not really closely regulated by the Chinese authorities. And according to the press release by the MSA, there has been a protest about people wanting their money back. Apparently, there's 71 million people have invested in a market that's estimated to be around $4.37 trillion. And like you said earlier, before we started out, that is not on the balance sheet, and so that's quite amazing. We're not saying that 4.37 trillion is going to be lost, but a big chunk of that could be it could be just a Ponzi scheme. He goes on to talk about how a lot of the new money, and usually these wealth management products give you a return of 3 to 12%. That according to Dr. Metzler. And a lot of times the new investors, they're the ones helping pay off the old investors, which is basically the definition of a Ponzi scheme.
Yeah, I did a double take when I first saw that article you mentioned from DMSA, because I wanted to make sure I was really looking at a number that big, that it really was nearly $5 trillion US. Because these are some massive numbers. I've just kind of been scribbling down a list here while we were talking about some of the debt figures surrounding China real estate. Right? There's about $11 trillion in mortgages in China right now, which is coincidentally, I think there was 10.7 trillion in mortgages in the US around 2008. So that they're right around that number. You've got $11 trillion in this local government finance vehicle debt that the municipalities and the provincial governments in China have, which is basically borrowing against land assets to fund development projects. You've got the $5 trillion in the bond market, which is really, when we hear about Evergrande's debt and Fantasia defaulting, we're just talking about this $5 trillion in the bond market. And now here's this other $5 trillion in secret debt, off balance sheet activity in these wealth management products. And it seems like the developers have been using this to kind of work their way around this three red lines policy, because they don't track it on their balance sheet, so it doesn't get reported in their official numbers. So we really don't know how much debt these companies actually have.
Yeah, I guess it's weird because 20 years ago, you wouldn't have heard of these numbers, trillions in China, but China has grown so fast over the last 25, 30 years. They've gone, Shenzhen, for example, was a fishing village of less than 50,000, I think, and now it's millions of people. And they've despite the fact that it is a communist country, they've created a lot of wealth. I know a lot of it is out of thin air because the Chinese central bank, they've pretty much followed the West with all the QE since '08. So it's shocking. I know it's shocking, but it's believable. It's a country of over 1 billion people, and a lot of wealth has been created. People have a lot of savings, and the investment class has grown massively, I would say, probably since '08, and that's why we're seeing these huge numbers.
Yeah, and speaking of seeing some of these large numbers, I did see some numbers came out of China earlier this week showing that new housing starts were down 33% for the year. And a number that really seemed suspicious to me was that home prices had declined 0.2% year over year in China. And I remember seeing those numbers, and it just did not seem to pass the sniff test with me. What are your thoughts on these numbers coming out of China? Will we ever know how bad things really are over there?
Well, yeah, a lot of people say that the numbers, you can't really believe the numbers. Their GDP numbers have been always like 7% year on year, or even more. It's a little bit like the numbers in the US and the UK and the rest of the world now. In the US as well, they're saying that owner occupied rents only went up 3% in the last 12 months. But this 0.2 or whatever, or zero point 0.3 that you said about China going down, that seems to me more a monthly number instead of a year on year number. I guess you can't really trust these numbers. And especially and you can't trust about what's happening, and I think it's really dangerous because it could spill over into our financial system, because a lot of our big financial institutions like HSBC, even probably Goldman Sachs and JP Morgan, they have presence in China. I'm not saying that they're going to be hurt. I'm just saying, I think I said this last time when you spoke to my viewers that there's a saying that when the U.S. Sneezes, the world catches a cold. I think you could say the same thing about China now.
Yeah, literally and figuratively, right? I mean,
Yeah.
the world did sort of catch a cold, didn't we, recently? And
Oh yeah, that one. Yeah.
yeah, that issue that shall remain nameless. I don't want to get my channel deleted.
Yeah.
You mentioned a pretty good segue there about we'll call it the contagion risk, the financial contagion. What do you see as some of the early warning signs? What should people watch out for? Maybe something we might see in the news or something we might read in the press that would say, okay, it's starting to show its face over here, in Europe
Yeah.
or in the States.
Yeah. I think we had it 2-3 weeks ago when the Australian bond market yields spiked really, hard there from like 0.1 to 0.75 in the 2-year or 3-year notes. You even had yields spiking in Europe, like in Italy and the UK. Yeah, when you see volatility in the bond markets, yields going up and down like that, and maybe keep an eye on the repo market as well to see how banks, because the repo market is a good indication of how banks feel about other banks, about counterparty risk. But it's hard. It's hard because they are covering up the stuff there, in my opinion. Of course, yeah, and keep keep track of DMSA in Germany. Dr. Metzler. I think they are not a huge company, but at least they're trying to get to the bottom of it.
Yeah, Dr. Metzler really is kind of channeling Michael Burry or Steve Eisman right now with, the way he's the one person who's ringing the alarm about what's going on in China, saying he doesn't believe the story that the public is being fed, and he's willing to stake his reputation on it. And we're yet to see anybody willing to stake their reputation to the contrary of what Dr. Metzler's saying. So, before this situation started, I had never heard of DMSA or Dr. Metzler. So, I can't really comment on his credibility one way or another. There's certainly nothing uncredible about him, right? I have no reason to doubt his credibility, and the fact that he's willing to stake his name, I found that interesting that nobody would be willing to be quoted to say these payments had actually been made. Nobody from any of the banks, nobody from any of these financial institutions, not the bond custodians, not even the company themselves. There has not been a single company spokesperson who has come out and said this payment has been made for many of these developers. And
yeah, even last week, I think when Dr. Metzler came out and said that they hadn't been paid, a few hours later, Bloomberg and Reuters came out with this story saying that it was. And they said Clearstream, which is a clearing company in Europe. The spokesman said that it had been paid, but he wanted to keep also his anonymity, right?
That's so right. The Dr. company spokesperson was not willing to be quoted, which is kind of their job, isn't it? To be quoted as a spokesperson. Yeah, again, we had a company name, so that was at least an improvement. That was a step towards credibility, but at the same time, why would a company spokesperson not be willing to use their name? I find it very interesting. And, you mentioned The Big Short earlier, and it does kind of remind me a little bit of, I hate to keep circling back to The Big Short because I think that movie is just way overhyped on YouTube, but I really enjoyed the movie. But this really is reminiscent of a couple of these important scenes and these ingredients in the housing collapse, like the scene when the guys from Brownfield Capital went to the Wall Street Journal, and the reporter was not willing to ask any tough questions to the banks.
Oh yeah, that's a good point. Yeah, that's a good point. And there you go.
Yeah. Well, do you have anything else before we wrap this one up? Anything else along the Chinese story, the housing story, or anything else you'd like to tell us?
Um, yeah, I mean, this just goes to show, and you mentioned The Big Short, that you hate to keep mentioning it, but I think it's really important because what this is probably going to show, in my opinion, is that they didn't reform anything. They didn't make the banks safer. If anything, the banks, they've become more uh, more, reckless. They're still making huge bets. You saw that the bets on the bonds are almost 10 times the amount of outstanding bonds there, the CDS. So yeah, the derivatives market, it's also gone retail. So many people now play the derivatives market without knowing it. Derivatives market is just a casino. And that's what I would say. The whole thing is, yeah, I'm not saying they didn't build real estate in China, but there's a huge gambling aspect to it, and I think the Chinese are huge speculators. So it could basically it could dwarf the Lehman collapse. I don't know how it's going to spill over into the West, but it probably will.
Yeah, it is important, folks. Keep your eye on that derivatives market because when you hear these numbers about, the 20 billion in debt or Evergrande's 300 billion in debt, you have to remember for every dollar of debt that these companies have, there could be as much as 10, 100, even $1,000 of derivatives that are being bet one way or another against that $1 of debt. And that's how these losses can just snowball out of control once counterparty risk gets involved.
Yeah, and what about those wealth management products? Are there derivatives on that as well? We don't know.
Yeah, it's an excellent point. Well, Mario, I want to thank you very much for your time and for coming to talk to us. Folks, the channel is Maneko64. I will put a link in the description to this video below so you can check out his channel and subscribe. Mario, thank you very much for your time, and I wish you luck.
You're welcome, and it was a pleasure speaking with you, Jack.
You too.